world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. This week, we've put together a special show looking at a couple of the biggest topics in fintech. Rebank is lucky to host some of the most noteworthy figures in the space. Their perspective and insight often provides an indicator of where things are going. One of the trends we've discussed on the show in the past is the move to component front, middle, and backend layers to replace proprietary pieces of the financial services technology stack. Today, we pull together some clips from past shows that allow us to take a closer look at that trend before digging into data analytics, AI, and machine learning, a handful of the components that are being increasingly deployed horizontally across the industry. We wrap up by looking at the potential for quantum computing to change the way we think about processing for different types of tasks. If you enjoyed today's show, reach out. Connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. For more on the topics covered today, check out the full episodes on our website, on iTunes, or on your podcast platform of choice. According to Santander InnoVentures partner Pascal Bouvier, we've entered the third wave of fintech, which will take another 12 to 15 years to play out. The first wave was direct-to-consumer, and was often aimed at disrupting banks after the 2008 financial crisis. The second wave was B2B, focusing on fintech partnerships with banks. In the third wave, fintechs will compete more directly with technology providers, horizontal front, middle, and back-end layers that cut across verticals and are provided by fintechs and incumbent vendors. Examples of these components include AI, blockchain, data analytics, IoT, AR, VR, and more. This idea is detailed in our friend and former Anthemis fellow Andra Sonea's excellent paper, The Ripples of Core Banking, available online through SlideShare. It is, without a doubt, one of the most lucid explanations of what I believe is likely to happen in fintech going forward. If you're serious about the space, it's a must-read. You'll see that this notion of componentization, as outlined by Pascal, was echoed in slightly different terms by Danny Gilligan and Simon Kant of the Australian VC fund Reinventure. We'll hear from them next. You operate very much on the cutting edge of fintech investing. Where are we in the temporal arc of the fintech investment thesis? How long will fintech be interesting to entrepreneurs and investors?
And I believe that we are in the third wave of a fintech deployment and a fintech narrative that is going to take another, 12 to 15 years, whereby the first wave was very much direct-to-consumer businesses that were started by entrepreneurs with lofty views and ideals of disrupting a bank or disrupting the insurance companies, an insurance company much like their predecessors had done in other industries than the financial services industry. That first wave ended with somewhat of a disappointment. Not many startups reach escape velocity or reach the expectations that were put in them. And there was a general pivot towards a second wave, which I'll dub a pivot to B2B or B2C models, right? So all of a sudden, partnering was and is the name of the game. Banks, insurance companies, other types of incumbents within the industry were best friends or supposed to be best friends with the startups, and all was well. We're in a certain way almost at the end of this second wave. There certainly has been collaboration. There certainly has been some hits and some successes, but not to the extent that probably people were expecting. And so we're starting this third wave, and we're smack in this third wave, which I dub TechFin, where there is 4 to 6 enabling technologies that are going to be put to bear to the business/technology stack of various incumbents and ecosystems, basically the 5 large ecosystems within the industry, i.e. Capital markets, asset management, lending, payments, and insurance, in a much deeper and broader way than the accepted understanding of what digitization is, which so far has been predominantly around front-end workflows and processes, anything that has to do with onboarding, underwriting, distribution channels, and so on and so forth. And so that TechFin wave is going to customize and tailor various enabling technologies, such as obviously blockchain. There's a lot of hype behind blockchain, but AI now, IoT, advanced data analytics, which is somewhat different than AI, AR, VR, as well as quantum computing in a couple of years, to middleware/middle office workflows and processes, and backend/back office workflows and processes. In a certain way, the analogy is, in as much as the first wave was about let's disrupt the incumbents, i.e. a bank, an asset manager, or an interest company, the third wave, the TechFin, is going to be about let's disrupt or try to disrupt the incumbent service providers, right? All of the vendors to the financial services industry that have developed different types of technologies that are selling, that are in market, and that may not have kept up to pace with the advances of technology, and that may be disrupted by new entrants, new startups that are coming up with new paradigms. So I think that's a main theme that's going to run for a certain number of years. We've seen over the past year this play out in the blockchain space. First Bitcoin, then blockchain, without necessarily Bitcoin. We've seen it more recently over the past, I would say, 6 to 8 months with anything that has to do with AI and chatbots, or AI and various types of other mediums for insurance companies and for banks. And I suspect that we're going to see that with other enabling technologies. In the background, everything that is happening with the Internet of Things is also another example of that.
Danny and Simon from Reinventure have spent an enormous amount of time formulating an investment strategy around the dynamics they observe in the fintech market, along with some classical thinking on industry disruption.
The third category, where actually probably a significant body of our investments are based, is in that layer, which we really call the modularization of the financial services stack. And this really reflects the trends, what happens when most value chains mature, particularly as technology penetrates those industries and value chains more. You get the peeling off of horizontal layers of capability that have been traditionally built by each individual operator in a vertically integrated stack, and then someone comes along and says, I can do that layer for you better than you can do it yourself. Why don't you buy my services in as a supplier? And invariably those decisions are economically rational and quite sensible decisions for an incumbent organization to take. So that might be at a cybersecurity layer, that might be at a data lake capability layer, that might be an analytics layer, an API layer, a credit layer, all sorts of different layers of capability within the bank. Why we think that's an interesting layer is because some of those layers, there's actually network effects that exist in those layers, and potentially long-term transfer pricing dynamics, which can create a phenomenon known as disruption by outsourcing. And a great example of how that was experienced was by an organization called Dell, which outsourced continually increasingly sophisticated layers of its value chain to suppliers in Asia who could continually offer to provide those services at a 20% lower cost than Dell could. And then they woke up one day and found that all Dell were doing were buying components from a competitor and putting their brand on top at a premium price. And that supplier then launched its own brand called ASUS for less than Dell, having absorbed all of the capability to build those machines. So there are a lot of those layers emerging in the capability stack underneath the customer-facing part of a bank, which have some potentially interesting long-term implications. And probably the river of gold we talk about in the banking stack is really data. In the same way that classifieds were the river of gold in newspapers, we think about data as being the river of gold in banking. And so this whole movement to open data and access to data and data capability is an area that we've invested quite heavily in. But along those lines, we've invested at an API layer. We've invested at a data governance capability layer. We've invested in the analytics layer in a couple of different spaces. We think RegTech is another interesting example of that capability layer. We think Treasury as a service is an interesting layer. We think credit as a service is an interesting layer in that stack as well.
And it's where blockchains, and we, to be honest, are really focused on the open blockchain. So Bitcoin, Ethereum, etc. That's another layer that is potentially being unbundled from the banking stack.
Identity is another layer that we think is potentially very, very interesting and has really interesting implications over time that we look into as well. So they're all the layers in what we call the capability stack in banking, and some of those layers which have network effects, which generally they'll be winner take all characteristics, can become really important if you can seed those early and leverage the position of the bank in your market. Then you can potentially position yourself well for the long term.
I mean, the other example of that form of disruption through modularization, was the original battle between Apple and IBM/Microsoft, where Apple did that full integrated stack with their PC, and they really stuck with it. And Microsoft, IBM went that modular route. And because Microsoft owned the layer that had those massive network effects, it ended up becoming the dominant player in that PC market. And then we're seeing the same experience starting to play out in the smartphone. So Apple once again brought the integrated stack. You could argue there are slightly different nuances, but ultimately I think we're seeing the same experience play out where Android, in terms of sheer numbers of sales, is definitely outpacing Apple with that modularized approach.
I'm fascinated by Danny and Simon's description of how they look at investment opportunities, which I think is great perspective for anyone operating in the space.
It's probably worth pointing out that the distinction that Simon made before about sustaining versus disruptive innovation, I mean, as a VC investing in the space, about 85 to 90% of fintech companies that we see are what we would call sustaining innovations in that classic fintech space. So they're really just doing the jobs of the bank a little bit better. And in our mind, they're not really venture-backable opportunities because the exit opportunities for those are generally quite low, and the risk of incumbents outcompeting you by building or partnering around those spaces is very, very high. So it's that Clayton Christensen lens that, classic battle between an attacker and an incumbent. The incumbent always wins at sustaining innovations, and the attacker always wins at disruptive innovations. So in that classic fintech space, a lot of people who are doing PFM, direct-to-consumer robo-advice, a lot of that stuff we see is more classically sustaining innovation.
Banks have come relatively late to the data party, somehow overlooking the vast amounts of high-quality data they collect on their customers. By simply leveraging what they already have, banks could use data analytics to transform the way they do business. Former Barclays Chief Data Officer Usama Fayyad shared his thoughts on data in banking. We often hear about the power of data. To date, we've managed to capture huge amounts of data, but we haven't always been able to glean predictive insights from it. What are some of the tangible opportunities available to banks if they can efficiently capture, store, and process large volumes of data?
One of my most, I'd say, crystallizing experiences at Barclays was when I realized the power of having access to payment information. So to begin with, let's start with the basics. Banks talk a lot about KYC, know your customer. And they think of KYC as a regulatory requirement. You must do it, you have to do it, it's a hassle, collect documents, keep copies, make sure you meet the regulator's need. If you think about it from another angle, KYC is saying the law is actually giving you the right, in fact it's demanding, that you know the customer's age, actual address, actual workplace, source of wealth, source of income, a lot of things that, when I was in the internet space, be it working with Microsoft or Yahoo or Google or whatever, I would have killed to have that kind of access to that kind of information. And what's funny is, we spend all sorts of resources on the internet space trying to infer and estimate that data indirectly, and banks are sitting on it. It's at their fingertips, but they never actually thought about how do I take this dynamic of thinking of KYC as a requirement and turn it into actually CRM. So how can I move my business based on this knowledge that I have? Payments data give you so much information about not what people think or what people are interested in, but what people actually are doing. So I can infer how much you drive from how much money you spend on petrol. I can infer how much you eat out, not infer even, I know how much you spend on eating out, how much you spend on different areas, and I'm talking here about sort of universal banks that have a credit card and a debit card. Barclays is a beautiful example because in the UK, if you take the retail bank, the debit card, and in the UK, the consumers like to use debit cards typically more than credit cards, although that's changing. If you take Barclay card, and then if you take the point of sale machines, a bank like Barclays gets exposure to easily over 60%, between 60 and 70% of all transactions happening in the UK. One of the things we did at Barclays is, for example, take that data and create the MP report. So for each member of parliament, will automatically generate insights into their districts. What's happening? Are people spending more money on, fast food restaurants, more money on expensive restaurants, more money on petrol, more money on insurance, where do things, energy, etc. And of course, those kinds of insights, those we offer to at an anonymized level to the MPs, and they love it. But there's versions of that we try to launch to small businesses. There's definitely versions that we did with the corporate bank. And these give amazing insights into what's happening. So for banks, as far as I'm concerned, the opportunity is cross-selling, upselling, servicing the customer better, predicting what the customer will do or will want to do.
In Danny and Simon's view, data has the potential to become an industry as big as banking in its own right. You guys mentioned, I think it was Danny who mentioned it, but data becoming the river of gold in banking. We've heard so much over the past few years about how data is going to change our experiences, everything from, social media to the way we're marketed to the way we live our lives. And certainly banking is a core component of that. We haven't really seen it delivered yet. Should we expect a flip to switch at a certain point and suddenly this power of data analytics in banking specifically is realized, or is there a long road to hoe still?
Danny has a beautiful analogy that he uses about the way the data analytics market has developed, which is there's been a ton of investment and a ton of innovation around smarter analytics. And what you've ended up with is a lot of, as Danny calls it, there's a lot of Ferraris driving around with no petrol in the tank. So there's a lot of really awesome data applications around that don't actually have access to the breadth or depth of data that they need to really shift the dial for consumers. And that's where Data Republic, which I mentioned before, why we think it's such a core innovation in that stack.
There's a lot of pieces of the capability layer in data. Data is as an industry, we kind of think that data is going to be as big as an industry in its own right as banking might be itself. And we think in a lot of ways that data has the same characteristics of money. And what's been missing is a lot of the same capability layers to make data as liquid and mobile, economically valuable, insurable, measurable, quantifiable, tradable, can be borrowed and lent. It's missing a lot of the same pieces of infrastructure that's been necessary to make the banking industry as sophisticated as it is today. So the bits of capability that have started to mature, which I think are really going to see an acceleration in data as an industry, are cloud computing technology and the low-cost processing power, storage capability associated with that, the progressive development in the algorithmic layer, artificial intelligence, machine learning, the increasingly sophisticated application layer technologies that are coming out, real-time processing transmission, and then just companies themselves organizing their own internal data sources effectively in data lakes, Hadoop, Spark infrastructures, etc. So that we're kind of getting to the point where we're cleaning up and organizing data in an effective way. And now what's really missing is this banking infrastructure for data to enable data to flow freely between companies in the same way that money does. And I think where we get to that point, and that's really the objective of Data Republic, is to create a trust framework and a governance layer that enables companies to share data with each other about consumers so that we can rapidly get towards that personalized experience, transformative, service-based, real-time contextualized experiences for consumers and businesses.
We asked Usama what he was most excited about in data science. His answer? Analytics performed over unstructured data. Voice, video, chat, images, supported by tools like AI and machine learning. Things we're already starting to see, but which have enormous potential. You operate at the cutting edge of data science. Where's the industry going? What are you most excited about over the next 10 to 15 years?
I think data science performed over the unstructured data. So things like voice, video, chat, images. In general, I would call it areas where you need to use these very sophisticated, often involving a lot of artificial intelligence, machine learning, etc., entity extractors or signal extractors from raw data, and then doing the learning on top and the data science on top is a whole new domain that will enable a lot of really cool things, potentially scary things, but cool things, because you can now actually truly harness the power of data to overcome the lack of knowledge that we have. So, we navigate the world based on sort of the best knowledge we have in our heads. It turns out that often we don't have very good knowledge, and what we know is wrong. But if you're in a situation where you have a lot of data, a lot of examples, you can have a dumb algorithm, but because the data signal is so strong, it forces it to do the right thing. And you see that, for example, the most obvious example of this one that hits you in daily life is when you type in your searches. You type in a search in Google or in whatever search engine you use, and you probably notice that, first of all, you get this predictive stuff where Google is trying to guess what are you typing. In fact, I'm particularly proud that we did that at Yahoo before Google did it when I was there. That was one of our achievements. But it turns out that if you look at the correction, the spell correction that's happened, it's not a dictionary-based spell correction. It's actually a statistical-based spelling correction that accounts for how often people make mistakes by typing the wrong way because of how the keyboard is laid out, either on the mobile or on a normal keyboard. More importantly, it automatically adjusts for things like slang and terms that a dictionary will have a very hard time sort of dealing with those errors. So a lot of the early search engines try to use dictionary-based. The algorithm was very much, I'll try to map that word to the nearest word in a dictionary. And that turns out to be absolutely the wrong thing, because that's not what people are doing. So that's an example where sort of learning from the big data gives you a much better product. It's not necessarily more intelligent. It's just much better at performing, because it will correct your errors much more effectively than a knowledge-based approach like a dictionary with a very careful algorithm that's designed, top-down to do the best possible inferences and all that kind of stuff. So those are great examples of new generations of algorithms that can do this, everywhere, while you're driving, while you're transacting, detecting fraud, detecting, intentional fraud, group fraud, all kinds of stuff will be possible. Of course, a lot of security applications, unfortunately, a lot of surveillance applications, something that we should all worry about. But all of these technologies have, their double-edged sword. They always have the dark side, and that's why we need the policies and the laws.
So how do we go from where we are today to where we'll be if Pascal, Usama, Danny, and Simon are right? David Breer of 11FS and the Fintech Insider podcast shared his view. So if we're 1% of the way there in terms of digital banking now, what does it look like when we're 30% finished, or when digital banking is 100% finished? What are some of those experiences?
There's probably a few different ways to look at this one. I think the 100%, we sort of believe that this will never be done. This will never be 100% completed. That really the mentality of an ever-changing landscape, whether it be from a technology, whether it be from a regulatory, whether it be from a customer's expectations being set by out-of-industry things, then 100% will never be achievable. It's about continually evolving. It's about establishing the mindset that change is inevitable in this space in terms of kind of what we're doing. But for the 30%, then actually I kind of think we start to sort of get into what is the future of banking moment, and I kind of think there's so many different opportunities there, and I think particularly in the sort of banking as a platform, banking as a service space, with probably the marketplace banks like Starling and Monzo and these guys kind of sitting in the middle of that, but. That's definitely where I see this going, really. We've talked a few times at conferences recently about if you're only selling your products to your customers in the next 5 years, you're probably missing out on quite a big trick. And the idea that, like you say, somebody like a bank as a service platform like Bud can come into the market and create no products themselves, but actually take advantage of wholesale regulatory changes like PSD2 and aggregate all of those things into a unified experience for people. The concept of not having your own products but aggregating them and selling them has worked out pretty well in other industries like obviously Uber and Airbnb and whatnot. So I can kind of see that being where we're going. I think the thing for sure that whether it's 30% or 100%, I think the balance out between the win that the bank gets and the win that the customer gets being much more balanced. The experiences that we've definitely sort of seen in big banks over the last 25 years really has kind of predicated business cases on sort of punitive charges, and I think those business model changes definitely are what we'll start to see, and like I say, bringing about balance with regards to who wins and who loses.
Scott Crowder, CTO of IBM's quantum computing division, joined us to discuss recent advances in that space. So are there some types of problems that quantum computing is better at addressing than classical computing or than humans? Or is the expectation that quantum computing is fundamentally better than classical computing in every single way?
It's not. What it's good at, and what initially it's going to be used for, is to augment classical computers in those types of problems that classical computers just don't do a very good job of. And it's those problems that are exponential. It's those problems that scale exponentially. So one class of them is just quantum physics, because quantum physics is that exponential problem we were just talking about. Particles interfere with each other in what you labeled as the thing that freaked Einstein out or made Einstein very easy. But that's how particles really work, like in a molecule. All the electrons are not independent. The electrons are interfering with each other, so you can't calculate the overall energy of a molecule by taking each of those electrons individually. You need to be able to have all the cross terms of them all interfering with each other. And when you have a small number of electrons, it's a tractable problem on a classical computer, but it's an exponential problem. So once you get to the point where you've got 30 electrons, 40 electrons, you're way beyond what a classical computer can handle, because it's now 2 to the 40th in terms of the size of the problem. And that's bigger than any supercomputer in the world once you get to like 45 or 50. So new materials development, anything that has to do with quantum chemistry, those are exponential problems that a quantum computer holds a promise to being able to solve that classical computers really struggle with. Mm-hmm. But there's also a lot of optimization problems that have that same characteristic. So, if you think of traveling salesman type problems, or something called a knapsack problem, in your brain, it seems like a fairly simple problem of, a salesman needs to go to 3 different stops and then go home. So what's the optimal order of those 3 stops to go and go home? It seems like a fairly straightforward problem, but that actually is an exponential problem. If you're just making 3 stops, there's not that many different combinations a classical computer would have to chunk through in order to find the best one. But if he has 50 different stops to make or 100 different stops to make, the number of possibilities that he has to go calculate in a classical computer goes exponential with the number of stops. So a classical computer just sucks at that. It's just not very good at that kind of problem. So there's a lot of logistic problems. There's a lot of financial optimization portfolio problems that kind of have that kind of same characteristic, that they're really exponential problems. As you add the number of variables or the number of states that are interdependent, the problem goes up exponential.
Looking forward, it's clear that quantum computing has the potential to propel our understanding of the world around us to new heights. If I can really distill this conversation down to one key point, it's that quantum computing will help us simulate a hyper complex world that we as human beings fundamentally aren't able to fully comprehend, and therefore our decision making is necessarily limited, extremely limited. Would you agree with that?
Yeah, no, I think that's absolutely right. And like the distinction that I just made, that quantum computing can simulate very complex situations where the probability space or the possibility space is just exponential and enormous, whether it be quantum chemistry or all the interactions in a country's GDP or financial optimization or whatever. What classical computing will continue to be good at is looking at huge amounts of data that already exists and pulling the insights from that huge amounts of data. So both of them are going to be really important in better understanding the world. But what quantum computing is going to allow us to unlock is understanding the probabilities and the possibilities and trying to find the best one for these really complex problems that society has.
No, it's fascinating to think about the potential applications, and clearly a lot of the initial interest, I'm sure, will be kind of commercial, i.e. company X looking for ways to, I think some examples you mentioned around financial portfolios, around logistics, around mapping, things like that. But really it sounds like some of the gargantuan problems that we as humans face, I don't know, around global warming and what the best responses are, around really kind of long-term social and political problems could be supported with the power of quantum computing.
Yeah, I think there is possibilities there. I mean, again, when you got a lot of variables, they all are interdependent, and you have subtle interactions. I think quantum computing, that 2 to the n power, has the possibility to really explore possibility space for those kind of problems. So I think that's true. And in IBM research, they're already thinking about it. And I'm sure as we open up more and more access to these types of systems over the coming years, you will see people start exploring use of them for those kinds of applications as well.
Brett King, author, speaker, and host of Breaking Bank's radio show, interviewed Ilyas Khan, co-founder and CEO at Cambridge Quantum Computing, on stage at an event in London in April. The conversation covered Ilyas's take on next steps for quantum computing.
This was probably, for many in the audience, the first time they've even thought about how quantum computing is going to affect banking. So I think that was an important discussion to have, particularly around privacy and security and cybersecurity, because the ability for us to use quantum, to produce strong encryption is incredible. That's a huge opportunity. What we thought would happen when AI came along, and with quantum computing, is we thought that this would give us the ability to crack any system. And it turns out actually probably the opposite is true, that people that deploy quantum and AI will have extremely secure systems. Those that don't will be really vulnerable. So in the short term, there's your strategy.
I think you made the point that a 2,000-bit number currently takes something like 1 billion years to arrive at the prime factors, a billion years, and with a quantum computer, literally a matter of seconds. Yeah. So talk about changing.
I know. I mean, this is it's. We have to think really differently about how we're going to use this computing technology. The one thing I found interesting was he was talking very much, and this is where academia has a role to play, is the modeling in terms of how we program quantum computers to solve these big problems that we have. Climate change, geoengineering, mining asteroids, colonizing Mars, curing cancer. The big questions, the polynomials, and all that we can't solve currently easily. All the stuff that he talked about, it does require a different programming paradigm. It does require a different way of thinking about asking the computer to solve that problem.
If Brett has a strong view about one thing, it's the future of retail banking. A handful of banks are openly attempting to become technology companies instead of traditional banks, a point which we pick up here.
I would imagine most banks would say that works for us because we're in the business of banking, and those guys are in the business of building software. The question, I guess, looking ahead, especially I think in retail banking or segments of banking where customer touch is unnecessary, where self-service is the model. What is the business of banking?
Mm-hmm.
If it's moving digital information around,
now you're starting to get it, right?
Then I think you're a software company.
Yeah. And so this is really the key challenge, is do banks make good banks in the future? And the answer is no, because the skills you need to be a good bank in the future is not expertise in banking. It's expertise in technology.
This episode wouldn't be complete without a look into a prospective future powered by sci-fi technologies. Who better to paint the picture than Dave Birch?
There's going to be some crazy new stuff coming through with some of these cutting-edge technologies, AI, machine learning, AR, VR, new experiences that can be created and deployed. I personally look forward to the day when I can order my Iron Man suit from where you sit and people you talk to and the work you do. What are you most excited about? How transformational could some of these technologies be over the next 10 to 20 years? Leaving banking aside, but really thinking about what the future might look like.
I have an Alexa in my kitchen at the moment, and 9 times out of 10, what you use it for is, Alexa, can you put on Radio 5, or Alexa, what are the current football scores, or Alexa, what's the weather like, and this sort of thing. Round the corner we're heading towards, Alexa, can you rent a car for me? I need to pick it up at Austin Airport, and I want to drop it off at Dallas Airport, a week Thursday. And my Avis number. Can you just do it on Avis? We're not that far away from that, really. And I think that has very transformational impact. I think a bit like the sort of smartphone thing, right? So a few years ago, phones were getting smaller and smaller and smaller and smaller, right? You remember that kind of Zoolander thing where they all had those tiny little phones and things? That was sort of funny. And then they started getting bigger and bigger again because of screens and apps and that sort of thing. So in parallel with that, you have a computing power and complexity that goes with it. But it could be about to go into reverse again. Because at the moment, a lot of the things I do on my phone, I have to run an app for. And I use the different apps to do different things. But of course, we're heading towards me just asking my phone, is there a tube strike today? Oh, God, what's the best way to get up to bank then? And it's not me fiddling about with apps and putting in, I'm at Liverpool Street, how do I get to here? And you know what I mean? So actually the complexity of those interfaces begins to go away. And because the people talk about the intentional economy. I mean, your phone knows what you want to do and can help you. Brett King wrote a very good book about this stuff called Augmented, where he was arguing, it isn't that the robots are going to take over, but things will become augmented by these technologies. And I think as a vision for the next 10 years, that's pretty reasonable. So if you're talking about the mainstream stuff, I think AI is the next set of transformations. If you're looking out of the corner of your eye for what's sort of does people say in left field? Is that what American? If you're looking out of the corner of your eye to see what's in left field, I might be very tempted to keep an eye on Internet of Things. Because right now it's all pretty shambolic. People are connecting their toasters to the internet. The toasters get hacked. Now everyone's Wi-Fi networks are open. People are taking over other people's cars and driving them around and goodness what else. So this is all pretty hopeless. But, if we could have a little bit of a breakthrough in security. You've got people like ARM with the TE, Intel SGX. You could see a next generation of those kind of things. So you could have some actual security in the chips that are going into the devices. Then IoT gets transformed into a place where business can get done.
I'm personally very excited about the coming advances in augmented reality and virtual reality and the new, new fundamental experiences that are going to result from that. And it's just, mind-blowing if you really sit down and think about what the convergence of all these technologies that we're talking about could potentially mean. Of course, it does make me wonder how, I don't know, if 5-10 years from now we're sitting around with VR headsets in which our friends' avatars are present with us in some fantasy world, and we're all hanging out and having a good time, and AI and IoT are driving our movements and lives and interactions, how we're possibly going to be also standing in line at a bank branch trying to clear a check.
That'll only happen in the US. That won't happen here. I think it's not that far-fetched to imagine this sort of thing happening. The sort of thought experiment I would do is to say, if you could get, suppose there was a Samsung Eye, which you could see, like I'm a little short-sighted, I have glasses, right? So now all of a sudden there's a Samsung Eye, so I can replace my eye with a Samsung Eye, and with the Samsung Eye I don't need glasses anymore, I can see. But Samsung, they would never stop at that. They're inventive, innovative people. So my Samsung Eye would probably have a zoom on it and enhanced night vision, and possibly a digital clock and display in the corner if I need that as well. Maybe my Twitter feed sort of scrolling in the distance down there. So who wouldn't have an eye like that? Like if you could get an eye like that, which did all the same things that your eye can do, plus it has a zoom and good night vision, why wouldn't you? And then you think, well, oh my God, well, who would spend money on that sort of thing? Do you have any idea how much money is spent every year on cosmetic surgery? So the idea that you would augment that way, to me, doesn't seem far-fetched. In fact, I think it's extremely likely. So I agree with you about that. But that's me and something I'm still in control of. The idea that
assuming you trust Samsung,
household objects are chattering behind my back, that's a bit more disturbing. No, of course. That's why you have to have certain kinds of security models in place which are based on open, not proprietary stuff and blah blah blah. Yeah, we know all that, but yeah.
Thanks to everyone for tuning in today. Catch you next week. Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.